Today is the 30th of July 2026, 10 a.m. CET and 4 p.m. Manila time. This episode, we talk about tax relief measures planned for Philippine households, Indonesia's central bank chief resigning, US Fed's communications gaps, and warning signs from 30-year US Treasury yields. Hello to our listeners. I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgreen, the founding CEO of Lundgreen's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgreen's Investor Insights. Join us as we analyze developments in major economies and financial markets globally.
Hello, Mel. How are you today and how's your week been so far?
Hi, Peter. It's been a rainy Manila over the past week. Also, a lot of rain as far as economic news are concerned. They're coming in droves, and it's been an exciting week, especially here in Asia. So, of course, always a lot to keep us busy, and some research projects going on as well, which we are ready to share when they're out. How about you, Peter? Is the sun still shining where you are?
Yeah, the sun is actually shining mostly. That is nice. But also a bit interesting stuff in work-wise. Also, we still have all our new defense company that is attracting interest. Then we are in a process sort of reviewing our own company. It is summer holiday season, so every year we build a company and sort of internally and look at the next steps. But we also review the companies we have in our investment portfolios and our alternative funds. And that is, of course, quite interesting as well. So, yeah, not bad. A lot of things going on, even in a quiet summer period. And the markets are sort of also interesting. Well, should we start in the Philippines?
Yes, one of the exciting moments of the past week has been the State of the Nation address of Philippine President Bongbong Marcos. And actually, it was quite a different speech from his previous ones in previous years. This one was more populist, so to say. He did call upon Congress to enact some bills that would seek to basically provide relief to middle class households. So a few grand promises were given, like tax cuts mostly. So he wants to raise the tax exemption for people earning, currently it's at the threshold is at 250,000 pesos annual income. That's tax free. He wants that raised to 350,000, so more individual income earners are seen to benefit. And then he also wants reductions in higher, at least the middle income tax brackets, basically unlocking more disposable income at the time when prices are high, when oil is very high. And yeah, that's really the goal. And also to unlock some more consumption, because as we know, GDP growth has been stalling in the last few quarters. But it's not domestic household consumption per se, but it's actually government spending, which is also quite questionable in terms of the approach that's being pursued. There's also this call to remove the minimum corporate taxes on small businesses. That could be good. And then there's this a bit more controversial call that he made to targeting specifically power distributors. So as we know, the power sector in the Philippines is highly privatized. Now he wants to he's asking Congress to remove a long time provision in the law that allows power distributor Meralco. So it's a virtual monopoly on the distribution side of electricity, where he wants to remove their right to pass on some charges to consumers. I think the charge that he's questioning comprises about 5% of power bills. So it's now an open debate. Of course, the regulators and the government side are saying, yeah, it's about time to do that. It will provide relief to consumers for sure if it happens. But on the other hand, you have your power distributor telling government that, hey, how will we cover that? We might lose money, or we might, yeah, essentially go bankrupt. That's probably not the case if it's 5% of the bill. But yeah, it's a lot of promises are being made to give a
Mhm.
short-term boost in consumption, maybe lift confidence as well, given
Mhm.
how low consumer confidence has been in the past few months.
Mhm.
Undoubtedly so. It's likely also something about the president's popularity. He has been unpopular in the last few quarters.
Mhm.
Um, but on the macro side, of course, that's where we look at. This is likely positive in the short term, boosting consumption and therefore GDP growth. But as we always say, the long term sustainability is the question. This will
Mhm.
undoubtedly put some strain on the country's fiscal health. The Philippines is 63% to be exact of GDP. That's the value of our debt right now. And of course, we would want to see that go lower. But with this revenue eroding measures, that's unlikely
Mhm.
unless government suddenly finds its way more efficient in terms of spending and collecting other taxes. So
Yeah.
that's one of the concerns that we have with these policies. Of course, anything that lifts consumption is well and good.
Mhm.
Anything that provides relief could be well for households, but ultimately it's the public fiscal health that we are looking at, and
Mhm.
it doesn't really sound good at this point.
No, this will cost money on the
Mm-hmm.
budget. Yeah, sure. Though it is extremely interesting, and it's not only interesting for the Philippines, and we should mention that the
Mm-hmm.
threshold today, the tax-free threshold of the 250,000 pesos, actually means that sort of an average middle income earner
Mm-hmm.
is tax-free. Also, they don't pay sort of income tax. So this is and it's highly interesting that the countries that are trying to compete on how's it income tax. We've seen some of the same steps in India, and that is now the Philippines is not the largest economy in Southeast Asia, but it has always been a world champ when it comes to GDP growth. Yeah.
Yes.
And that position, it is interesting. The country is fighting to keep the very high growth as a GDP high growth is position. It's really interesting. Basically, you take a share of the government debt to GDP and invest into growth and say
Yes.
this is. But it is the good thing about this is where it is invested into private sector growth. This is important. We would be very critical if it was just public spending. This is
Mm-hmm.
uh, this is uh, this is a good thing. This is increasing flexibility in the economy. So on that part, but we know that it will have a price on public finances. But the Philippines is in the position to allow itself to do so. And the key is it might be a bellwether. Also, others, Asia, Southeast Asia, also like India, um,
Mm-hmm.
are playing this way around. Yeah. And if we should take the very big picture, this is what China should do. They have a somewhat higher debt ratio, yeah. But the tax revenue from private households is not that dominant in China.
Mm-hmm.
They should do it. As they should do the same to try to get the private consumption to a higher level. So this is highly interesting. It's not only is because it's interesting for the Philippines as such, or also partly the Philippine stock market. Of course, whatever is linked to private consumption will be even
Mm-hmm.
more attractive to on the stock market in the Philippines. But this is sort of the bellwether. Yeah, interesting stuff, and it's worth to follow. But what goes on in the neighbor Indonesia, that is it's sort of
Yes.
the wow, the downward spiral is sort of continuing, yeah.
We have
Uh,
not been too kind on Indonesia, and it is with reason, Peter. So we have been watching that Southeast Asia's largest economy very closely for quite a while, and it's not looking good right now. Just this week, the governor of the central bank, Perry Warjillo, has resigned from his post.
Mm.
That is 2 years, 2 full years ahead of his end of term. So that's
Yeah.
very unusual. It's not like a cabinet position or any other government agency position that you can appoint someone and then leave and then appoint someone. It's very pivotal. Of course, the central bank governor is head of monetary policy. And they did not say specifics, but he did just cite personal reasons for leaving. And of course, the president of the Indonesian government has accepted it. It comes just as Indonesia is battling with a very weak currency, a falling stock market. I could go
Mm.
on. Interest rates have been raised multiple times this year just to curb inflation and somehow defend the rupiah. But of course, it's not really entirely up to the central bank to defend the rupiah when uh, things are essentially going wrong for the
Mm.
Indonesian market. Um, it's hard to shore up both appetite and reputation for Indonesia right
Mm.
now, and this piece of news is certainly not helping. We do recall that several global credit rating agencies have flagged Indonesia for insider trades and, of course, a mix of populist fiscal policies that are endangering the trajectory of both the Indonesian stock market and Indonesia's fiscal numbers. We haven't seen that yet in the GDP numbers, but it's not looking good either.
Mm.
Um,
No. Yeah.
it's perhaps a warning for other economies that are looking to sway to the whole populism
Yeah.
policy. Um, it's hard to watch because
Mm.
Indonesia really does have a lot of potential in terms of sustaining growth. They still are at the high growth range right now,
Mm.
above 5%. So that's great to
Yeah.
hear. But at the same time, I think this is a crucial context for this development. Very recently, the Indonesian parliament passed a bill that requires the Bank Indonesia to support GDP growth. So
Mm.
I'm not sure if that's an actual addition to their charter, but it really does put into question the independence of the central bank, and that is not something that we like to see. And it creates a lot more uncertainty regarding Indonesian markets. The
Yeah.
Prabowo administration wants to bring GDP growth to 8% by
Mm.
2029. And if
Yeah.
does that mean it would want to influence the central bank to keep rates low just to keep growth high is something to look out for. And of course, part of that now is who will he appoint as the next governor? And that's what we're
Yeah.
watching out for.
For us, Indonesia is absolutely still a no-go.
Yes.
We and as you say, when the government starts to sort of tell the central bank what to do and start to use the central bank as an instrument in their economic policy, then we as a it's a complete no-go. This is
Mm-hmm.
highly dangerous. Cannot be recommended. Um, some of the last resorts to take over the hand on the central bank. So yeah, it is just to underline that a lot of things happening in Indonesia is unfortunately sort of in the wrong direction, to
Yes.
say. And yeah, we just yeah await that the lessons will be learned. We don't hope it will be too painful, but another direction is needed. But very important for investors. It
Mm-hmm.
might not just be Indonesia, because if Indonesia is sort of all of a sudden into too deep trouble, it is a large economy. Southeast Asia is a dominant country, and that will have a negative spillover. That
For
is
the
sort
future.
of course, what we are watching the most. Good. Let's jump to another part of the world, and dive directly into the biggest economy in the
Yes.
world, and exactly on uh, yeah, Wall Street predominantly. Following up on basically the Fed, U.S. Central Bank Fed rate decision about doing nothing.
Yes.
It's it actually has some interesting complications, I would say. The thing is that as we for sure had expected that they wouldn't change the rate, and in general the market expectation is it will happen in October, the hike. Yeah. So it was a bit sort of how can you say it, almost daily business that they announced they wouldn't
Business
change
as usual,
it.
yeah.
And not a lot should have happened on that one. And that is the interesting thing. So Wall Street went lower when it comes to the stock market, and actually also as the bonds dropped as well, the yield went higher. And then we can sort of discuss at the same time, Meta came with a disappointing quarterly result, and it dropped Facebook, yeah, it dropped 8%. Now the question is, what was the most negative for the stock market? Was that the Fed sort of speaking, or was it Meta? Uh, we can joke a bit about it, but I actually, as a partially, minimum partially, I will put my money on Meta and say that
Yeah.
was actually more a more important event for
And
Wednesday's price
trading.
action,
Yes.
yeah, in the stock market. But other stuff happens as well. First of all, we had a look at the new Fed chair, Kevin Warsh, and see how he was performing and how is he communicating with the markets, how is he communicating overall, yeah. And honestly, it wasn't too good. Let's be honest.
The
We
kind of
have,
silence down in the last few months. And it's, I think
yeah,
the market is still finding its way to read how to read him.
prior to as a Fed chairman, they have been somewhat more competent in communicating actually pretty directly and guiding the markets about what is the thinking at Fed. Um, I trust that the new Fed chair he will improve in that part because this is something that the Fed is fantastic at. They are fantastic in communicating with the market and give a clear signal on what Fed thinks and what they as a where their positions right now. And this is it's always fantastic done. A lot of praise for that. So they just need to uh, have the new chairman in sort of enrolled
Step
in
up,
that
yeah.
sort of high quality communication uh, situation. But so it was actually a bit. What was a bit surprising is that you have an event where you say, okay, we expect nothing and nothing should happen, and you should just say sort of roundabout that we are here and that's it. And then it ends up in stocks going lower, and what may be even more important when we are talking about the long term is that the US 30-year Treasury rate went up with 0.14 as a 14 basis point in one go in one day. It's a lot.
Yes.
It is truly a lot. It sounds maybe a bit sort of, oh yeah, okay, but it's a lot. And we are hovering just below the 20-year high on the 30-year bill. Yeah. So I think today it's 19-year high. So the next step is actually to crack and say, okay, it's a 20-year high. It's very close. Now, this is a bit dramatic. Again, take into account when we judge the financial market. This is a cloud on the horizon. It is, yeah. And again, we've talked about it many times. We should remember the reason why US interest rates and on government debt is rising. It is not due to higher growth. So where you would say higher growth generates higher inflation, and
Mhm.
okay, it sends interest rates higher. That's okay. We could
That
live
would
with
be
that.
sensible, yeah.
This is due to fear of it can be inflation, and it can also be government debt levels. And this is much more critical. It ends up being a threat to the stock market as well. We take it into account. We're not that happy. And then we could discuss is part of it is that simply not optimal communication, maybe. So there's a lot to keep an eye on there, and we are talking about the biggest economy. We are talking about the most powerful central bank in the world. It was some sort of a surprise, I would say. Mel, it's good that the Fed can tune in on our podcast and get three answers and get a sort of a straight idea what to do. Yeah.
You can adjust for the next 6 to 8 weeks and be ready just before the next Fed meeting. One actually very interesting headline I came across overnight, because of course I was reading up on the Fed, is this I think it was CNN who said that unfortunately Kevin Warsh cannot reopen the Strait of Hormuz. So he doesn't really have a lot of room to make things happen. Trump, the appointing person for his position, wanted him to keep rates down, but at the same time, he's really making it hard to do that. So it is a circular, I don't know, it's a big chain of problems that we know who started it, but we're not so sure if there's an immediate solution. We do still think that there is that incoming chance or chances to put an end to it all and, for example, resolve the conflict at the US between US and Iran soon so that oil prices can settle back down again. It has been fluctuating in recent days, which is of course adding to volatility, and combine all of that together and you get more nervousness, higher treasury yields, and overall um, more pessimism than what we want to see.
Yeah, exactly. If we should jump to the usual bit
Mm-hmm.
sunshine outlook, do we say would it have direct implications? Maybe not, but we are entering August, and August is sort of where a lot of market participants are out for holiday, and
Mm-hmm.
that also means that the market is thinner, and we have having these rising uncertainties. So we do expect in August with some volatility. But can it sort of erase our sunshine outlook, Mel? What do you say?
Well, we do still see sunshine prevailing against the heavier clouds that hang across global markets. We have always been more upbeat about developing Asia, and that remains to be true.
Mm,
There are these pockets of growth and pockets of opportunity, especially with economies like the Philippines, which is actively trying to perk up consumer activity, and of course that helps perk up GDP and domestic activity, and that's good. Um, we are watchful about in Indonesia because of the
mm.
many wrong turns that they have taken in recent days. But yeah, we cannot deny that that's still a very big force in the Southeast Asian market that we monitor. Overall, for Asia, there remains to be an upbeat outlook, Peter.
That's okay, yeah. As usual, we like the emerging markets in general. We like overweight risk. We also like the credit risk, but with
Mm-hmm.
short duration. And the reason why we prefer short duration, have moved from long to mid to short duration, is of course exactly what we're seeing, that US interest rates are pointing upwards. And then we are happy for non-listed assets. We yeah, overweight risk in different directions
Mm-hmm.
still. But I mentioned we are prepared to have a more volatile August. Not that it should so far change our overall allocation and direction, but at any time it can be we say okay, now things are changing. Yeah. Good. That is the outlook right now. So net is still the sunshine,
Yeah.
clouds on the horizon, yes, but we still prefer the upside. So that's very good. So thank you, Mel, for being on board today. Thank you to all the listeners, and we will be there next week again.
Thank you, Peter.
Thank you for tuning in. As always, we keep a watchful eye on market shakers and movers. Catch the next episode of Sound Economies with Mel and Peter, a podcast by Lundgreen's Investor Insights. Available on Spotify, YouTube, and wherever you listen to podcasts.
Lundgreen's Invest has secured a historic quadruple exit for its high-tech defense fund. Following the sale of 4 investments to the Danish defense company Omni Capabilities, the fund's value jumped by as much as 40% in just one day. The good news? This evergreen fund is officially open to new investors with an exit possibility every 6 months. Visit lundgreensinvest.com to know more about this co-investment opportunity.
Lundgreen's Capital has been in the business of investment advisory and wealth management for over a decade, with our high-performing and multi-awarded funds to show for it. We're taking this to the next level through an IPO in 2 years. Join us in this journey. Visit our website to learn more.